Okay, let's set the scene. It's late 2020, the entire world is basically locked down, and the travel industry, it's in absolute ruins. And right in the middle of all that chaos, Airbnb decides to go public and pulls off one of the most successful IPOs in history. Their valuation just skyrockets on day one. It was this wild comeback story that, honestly, seemed to defy all logic.
So yeah, that's the big question we're tackling. How in the world did that happen? Right? How does a company that's all about travel have a record-breaking launch when literally no one is supposed to be traveling? It seems completely impossible.
Well, the answer is kind of hidden in plain sight. It's inside this huge, super dense legal document called an S-1 filing. Now, this isn't just boring paperwork. By law, this is where a company has to spill all its secrets. They have to list every single thing that could possibly kill their business. It's basically a treasure map of risks, and today we're going to dig in and see what it's really hiding.
So here's what we're going to get into. We're going to look at their shocking $2 billion deficit. We'll talk about the constant threat they face from governments, how they survived on just debt and brand power, and my favorite part, how the founders kept all the power for themselves. This is the real playbook we're going to unpack.
All right, first up, let's talk about the money, or actually, the incredible lack of it. And this is going to sound a little nuts, especially when you think about how much the company is worth today.
The very first secret we're pulling from this document, it's a number, and it's a number so big, it's kind of hard to even process. It tells you everything you need to know about what Airbnb truly valued, not profits, but just pure, relentless growth at all costs. That number is $2.1 billion. That's right, that was their total accumulated deficit at the time they went public. To put that another way, over its entire life as a company, Airbnb had lost more than $2 billion. Just poof, gone.
And as you can see from this chart, this wasn't like one bad year. Nope, the losses just kept piling up, year after year after year. This was a choice. It was a strategy. Spend a ton of money to grow as fast as possible and, we'll figure out how to make a profit down the road. And the crazy part? They weren't even hiding it. This quote is straight from their S1, telling everyone, hey, we lose money every single year and we might never be profitable. It's a huge reminder that this IPO wasn't just some victory lap. No way. It was about a desperate need for cash to start filling that gigantic financial hole they dug.
Okay, next up is a threat that comes from the outside. It's a constant battle they're always fighting. Because for just about every dollar Airbnb makes, there's a city government somewhere that might want to shut them down.
And the S1, they call their legal situation a complex mesh of inconsistent local laws, which is really just a fancy way of saying it's a total nightmare. I mean, think about it. A hotel knows the rules, but for an Airbnb host, the rules are different everywhere, they're confusing, and sometimes they come with huge fines or even, believe it or not, criminal penalties. And this isn't just some hypothetical problem. It has a real price tag. You look at big cities like New York or Barcelona, they've passed some really tough laws against short-term rentals. This forces Airbnb to pour millions and millions of dollars into lobbying and lawyers just to stay in business. Their growth is in a constant war with local politics. So, okay, you've got massive losses, legal battles everywhere. And then a global pandemic hits? How did they possibly survive? Well, this next part is wild. It shows how they were pushed right to the very edge and then saved by two totally different things: a whole lot of debt and an incredibly powerful brand.
I mean, just picture it. It's the early days of the pandemic. Travel is at a complete standstill. To stay alive, Airbnb had to take on nearly $2 billion in high-interest debt just to keep the lights on. It was a pure survival move.
But here's where the story gets fascinating. To save cash, they slashed their marketing budget by a massive 54%. For most companies, that would be a death sentence. And yet, their revenue only dropped by 32%. Think about that. It proved their brand was so powerful that customers were coming to them directly without needing ads. The debt saved the company for sure, but the brand proved to investors that the business itself was incredibly resilient.
All right, for our last big secret, we need to talk about power. Because after a company goes public, the public gets to have a say, right? Well, not exactly.
Just look at this chart. It tells you everything you need to know. After the IPO, the founders and their early insiders kept 98.5% of the total voting power. The public investors, who poured in billions of dollars, they got to share that tiny little remaining slice. It's kind of mind-blowing.
So how is that even possible? It's a mechanism that's really popular in tech called a dual-class stock structure. It basically just means that not all shares are created equal. Some shares come with way more power than others. Let's break it down. The Class A stock, the stuff sold to the public, gets 1 vote per share. But the Class B stock, held by the founders, gets a whopping 10 votes per share. This setup ensures they have the final say on every single major decision, period.
So the crucial takeaway is this. When you buy a share of Airbnb, you're buying a piece of the financial outcome, sure, but you are not buying any meaningful influence over the company's direction. You can buy the stock, but you don't get to buy the power.
So when you put all these secrets together, the massive deficit, the legal fights, the pandemic survival, and that iron grip on control, what do you actually get? Well, you get the playbook for the modern tech IPO.
It really boils down to a 3-step plan. Step 1, use investor money to fund years of relentless, unprofitable growth. Step 2, build a brand so strong that it becomes a verb and can survive pretty much anything. In step 3, when you finally go public, you make absolutely sure that you keep absolute control.
It's a powerful model, no doubt, but it leaves us with one final provocative question. If long-term profitability isn't the immediate goal, and if the public investors who fund the company have virtually no power, then what is the real purpose of an IPO like this in today's market? That's something to think about.